What's going on, guys? I kind of want to give you guys a little idea, right? So, as a trader, we have to be able to adapt and we have to be able to, go long, go short, kind of stay patient at times, wait for our setup. But, one thing that we also need to be able to do is, sometimes you're sitting here, you're watching the price action, you're looking at your strategy. We could be super extended away from the moving averages, or we could be well below all of the moving averages and supply. There's some things to kind of um, analyze and see if you could potentially profit. Now, what I'm looking at here on Apple is the 1 hour time frame. Okay, what I'm also seeing here is that we do have lows of $158. We breached below yesterday's lows. We kind of put in a new low today. Didn't really go too much, but we've been trading sideways, right? With the exception of 1 hour out of today, we've pretty much been trading sideways all day. And with that being taken into consideration, anytime you kind of see multiple hours, right, on the intraday chart, multiple hours, and it's all has the same area, you can almost assume that this is going to act as an area of support, right? So if this area does not hold and we start to break below support, we can take our opportunity at shorting. Now, here's what I kind of want to get into. How can you play this to the flip side? Well, being that we have held this area for multiple hours intraday, 3 hours to be exact, if Apple does hold this level and the market starts to recover a little bit, because stocks are not always going to go straight down. There's going to be ups and downs along the way to the end of the road, right? So one way that you can play a potential bounce, and this is high risk, and you also have to manage your funds accordingly and have a stop loss and understand, how much you're investing and what are you willing to lose on it. But for example, we can use $158 as our stop. The stock is currently trading at $158.50. What does that tell you? What that tells you is that if Apple maintains holding 158, we go ahead and we get long and we sit in this trade. Okay. You sit in it, you wait on it, you let the trade develop. And what that means is if we bounce and you potentially get 1 or 2 points off a stock like Apple on a bounce, you definitely sell your profits. If you took more than one options contract or you're trading multiple lots of Apple shares, then definitely want to take a little bit of a runner. Now, what happens if you get into this trade here? It kind of trickles around, does nothing, maybe bounces, not enough to take any profits, and then loses 158. At that point in time, what you can do is cut your position on Apple and either call it a loss, or you can look to the overall markets. What is the NASDAQ 100 doing? Are we continuing to give up ground on the NASDAQ 100? And then you can take your short position and use the 158 as your ceiling. And that now becomes your stop loss on your short position. So you have two ways to play these bottom fishing, plays. You can take an opportunity and try to bounce this. You're giving yourself 30-40 cents worth of risk on the trade, telling yourself as long as we hold that level, I'm going to stay long. If we do manage to lose that level, you just cut your trade for a break even or a cup of coffee loss. Now, if you're looking to short, you kind of let the stock do its thing. You stay patient, you sit on your hands, and as soon as we start to breach the 158 and you look over to the overall indexes, if they are continuing to give up ground as well, you can take your opportunity at a short position. That's how you can, play these consolidation low breaks. That's how you can play these low of day breaks to your benefit. But this is how you can also bounce a stock that has been beaten up all day, right? Because we have to imagine stocks are not just going to go down in a straight line. They're going to give us an area of opportunity to bounce the play. So that's how you'll be able to bounce it. If you kind of look at Apple now forming this 1 hour green candle, it is trying to recover a little bit of these losses from the selling pressure. Not saying that we're going to take out the highs of 159, 160 and come to 161, but it's definitely on the table. And as long as you are managing your risk, which in trading, that's all this game is about, the psychological levels of managing and maintaining a good stop loss and maintaining a good mental health so you can manage your risk accordingly. Nobody knows if the stocks are going up or down on a daily basis. All we have are indicators. All we have is prior data. All we have is price action to kind of help us with that and make our best educated trade according to the data that we're following. You can't just buy stocks because they're going down. You can't just short stocks because they're going up. You can't just throw money all over the table. You need to have a plan. You need to have a strategy. If you guys are looking for a strategy, whether you're a beginner or you've been trading in the market for 20 years, down in the description box below, I have a 30-minute training video on how you can trade the first 1 to 2 hours of the market open each and every single day. That is completely free. My gift to you. Check out the link in the description. If you guys would like to join my Discord, that link is also in the description box below. Make sure you guys are giving me a thumbs up and subscribing to my YouTube channel. I'll see you guys on the next one.